Good afternoon, everybody, and welcome to the closing bell here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock, where in the next 5 minutes, I am going to wrap up this record-breaking week. Yes, records are meant to be broken, folks, and the markets did it. The stock market has enjoyed yet another strong week, lifting all of the major averages to new highs. The S&P 500 rallied this week 3.1%. You have the Nasdaq up 3.6%. And there was some real outperformance by some technology names, and in spite of some relative weakness early in the week with the biotech sector. The Dow Jones settled today at 19,706, up 142 points. We're staring at 20,000, folks. And the Russell 2000, those small cap, domestically centric stocks, we're up 0.1%. A little bit of a laggard today, but this was the leader as a group all week. This week they were up 5.6% as a group. The equity indices in the beginning of this week, well, they started upbeat. They started to rise alongside the European stocks, even though we had a few headlines out, one of the most notable being that Italy shot down the reform to basically build out the rebalance of the power of the Senate. Well, that got shot down by a pretty significant vote, almost 60% voting no. That led to the Prime Minister, Renzi, putting up his resignation. The president of Italy didn't accept it until the vote was formalized on Wednesday. European stocks were lifting up after that vote. And it was very interesting. People thought they would be on edge, but there seems to be quite a positive flow out after the Italian vote. Now, I say that, but the banks in Italy are in tough shape, and we're going to watch that very closely going into the upcoming weeks. They need recapitalization, and the Italian government's going to have to do it because the ECB has just basically said they are not going to have any part of that. So we'll watch that very closely in the upcoming weeks. Basically, over the course of the week, we've seen that biotech names were under pressure. Why? Trump made some comments to Time Magazine basically saying that he is going, and his cabinet and all of the people that he's going to have in his inner circle are going to looking at drug prices. Biotechs took it on the chin a little bit, but they bounced back pretty nicely towards the end of the week. We're going to watch this sector very closely. This is one of those offensive leader sectors. Watch IBB. That's the ETF that tracks the biotechs. That could be very interesting. Another market mover this week was the ECB and their QE, their quantitative easing. They basically are saying they're going to continue it post the March 17th deadline when they were going to basically cease all purchases of 80 billion euros a month. Well, they are going to continue that purchase program. It looks like right now through the end of 2017, they are going to taper the amount a little bit, but because they're extending it out for the full year instead of the expected 6 months, the 60 billion euros that they tapered to, it's now extending out to the end of the year. That's 60 billion more billion euros than they were anticipating as far as QE. We'll see if interest rates start to move in Europe based on that because, again, while that is slightly a dovish tone coming out of Draghi and the ECB, I think right now we're going to watch rates very closely because growth is going to have to follow with all of these rate hikes. Speaking of rate hikes, we have a Fed meeting next week on the 13th. They are going to decide whether or not to raise our interest rates here in the United States up another quarter to a half a basis point. Right now, the Fed funds market through the CME FedWatch tool is pricing in a 97% probability that they're going to raise rates at least a quarter of a point. We'll have to wait and see. But again, that's what's being priced in. You saw that the yield curve and the difference between the 2-year and the 10-year, which is what I watch very closely, that gives me an idea of how rates are moving. That difference between the 2-year and the 10-year is the largest that we've seen in 2016. There's 133 basis points, or 1.33%, difference between the 2-year yield and the 10-year yield. The 10-year yield was up to about 6 basis points, over 2.47% against the 2-year, which was basically at that 1.33%. So folks, there has been enormous moves on the yield curve. Bonds were off today. We see new record highs. At some point in time, we're going to see this levity of the market come under pressure, but we'll have to wait and see. We'll see the fundamentals. The data keeps coming out. It keeps being positive. The headlines keep coming out. They have been driving the market. But I will tell you this, over the weekend, we're going to be taking a look at some opportunities to maybe tweak your portfolio. Join me Sunday night at 5 p.m. Eastern Time as we will talk about Sunday night setups, taking a look at the week ahead and basically throwing out some setups. Till then, join us on MarketStream.live. Look at all the recordings. We're going to be putting some premium section components up where they're going to be a lot longer in length. We're going to get into a lot more details. We'll have some visuals in there. So there's a lot coming on the forefront. Till then, have a wonderful weekend, and we will see you next week here on MarketStream.live. Take care, everybody.